Okay, guys, we're going to look at a little bit more of the payroll expense portion of things from the employer's standpoint. We're going to be looking at unemployment tax. That is something that an employer pays to help cover you if you get laid off. Sometimes, even if you get fired, if you can sort of prove that maybe you weren't entirely to blame, this is the way that you can draw at least a partial paycheck until you can find other employment. Okay? We're going to talk about that a little bit. We're also going to talk about the employer's end of the FICA expense, okay? Because when you work for someone, you pay into FICA and they pay into FICA for you. And the part that they pay in is something that the business pays on top of your salary. They do not take it from your check. They just know when they hire people, whatever they're planning on paying them, they have to add a percentage to their budget because that will cover that person's Social Security tax and Medicare tax, okay? And the Social Security tax expense, these match up. It's the 6.2, and the Medicare tax is 1.45. So basically, you pay half and they pay half. And that's how that works out with FICA if you are employed by a business or a company, okay? So you figure it the same way. It's $2,400, and you're going to multiply that by 0.062. And you are going to get $148.80 that they pay in Social Security tax. Then you do your Medicare tax. Again, exactly the same way. There's $2,400, and you're going to multiply that times 0.0145 and see that what they pay for Medicare tax is 34.80. And then you just add them up the same way you did when you were figuring what you would pay yourself. And you get 0, 16, carry your 1, 13, carry your 1, 8. $183.60 that the employer pays. So actually, this $2,400 paycheck they give you is going to cost them that plus, okay? Because they add that amount to what they consider when they're paying you. So I have failed to line up my numbers, but there. That's what they actually spend on your paycheck that particular week or pay period, whatever it falls as, okay? So that's how that works. Now, self-employment tax is different because you are not free from FICA just because you are self-employed. In fact, you are sort of double burdened with it because if you're self-employed, you have to pay your part and you have to pay the government's part, okay? And so your Social Security percentage is 12.4 and your Medicare is 2.9 and that's 15.3. And that's what you can use as a multiplier. Move your decimal. So you have $58,000 and you're going to multiply that by 0.153. And you see that you're going to pay $8,874 in FICA tax. Now, the thing that will help you out some, not entirely, but some, is that when it comes time to file taxes at the end of the year, you can deduct half of that. Now, deductions, tax deductions are not dollar for dollar. Just because you deduct the $4,437 does not mean that much is actually coming off of your tax bill, but it will help lower it. So if you are self-employed or plan to be self-employed, be sure that you have a good understanding or a good CPA that can help you make sure you're not paying in too much money in taxes and that you're claiming all of your deductions. Okay, now we're going to look at unemployment tax, like I was talking about at the beginning. This is something that is paid in by your employer so that if something happens, if the company closes or downsizes and you find yourself without a job, you can draw at least a partial paycheck to keep you afloat until you can find more work, okay? And they look funny. It's FUTA and SUTA, but that's just federal unemployment tax and state unemployment tax. That's what that stands for. And the standard rate is a little bit funny if you're looking at federal because the standard rate it's 6%, so you would multiply times 0.6. But if your state has unemployment tax, then the federal government gives that state a 5.4% credit. So then your multiplier, and all of this is in your module, so you can see it written out, then your multiplier becomes 0.006. Okay, so it's less. And it is taken off of the first $7,000. Okay, so even though they're making 12, we're only taking this off of $7,000. So if we multiply the 7,000 times the 0.006, we see that the employer paid $42 for this employee's FUTA tax. Now, the SUTA starts at 10, so they've made 12. So we do that on the whole $12,000. We multiply times the rate, which is 0.03, and we see that they paid $300, okay? $300 in state unemployment tax for this employee. So the total for this employee is $342, okay? And again, that's really something you would need to know if you decided to go into HR or something where you were working with payroll, because it can get kind of complicated and you're going to have to understand all of the laws for the particular state that you're working in. Okay, now we're going to look at quarterly estimated taxes for a self-employed person, because a self-employed person is required or at least encouraged to pay their income tax, to project it and pay in an estimate quarterly. What is quarterly? Quarterly means 4 times. So 4 times a year they're asked to pay in, okay? And how you factor the required quarterly estimated tax payment is you take the estimated federal income tax and the estimated Social Security tax and the estimated Medicare tax, and you add those together, and you're going to get 4960 plus 1160, 14,520 for the year, and you need to pay it in quarterly. So all we do to see what the quarterly payment would be to divide that amount by 4. So you're going to have a $3,630 required quarterly estimated tax payment. If you come to the end and you have overpaid, it will come off of your last payment, or they will refund you if you completely overpay for the year. But again, these are all things you need to start thinking about if you're going to be a self-employed person. Okay, guys, that's all I have for that one. If you have any questions, just give me a holler.